What's up, trader homies? It's your boy Kevin from Touchdown Trades, your trading BFF, your stock market bestie. Still out of the Touchdown Trades trading bunker. I've left the bunker. I'm still at the beach with my girlfriend and her family. But as a trader, we cannot take days off. Our livelihood depends on it. So I wanted to put a trade on that I didn't have to monitor every second, where I didn't have to be up in the room looking at the computer all day, monitoring my trades. So I decided to put a trade on here on Tesla. In this trade that I put on, I used options as my vehicle. And the great thing about this trade is it's very low risk, high probability, and direction doesn't matter. So I don't need Tesla to go up. I don't need Tesla to go down. I just need it to trade in a specific range, and then I'm going to profit $3,500 on this trade. So it's a great trade, even if it works out. If it doesn't work out, so be it. But I want to go over the trade real quick and show my strategy on trades like these, so maybe you can add this type of trade to your arsenal. So that's what we're going to be talking about in today's Touchdown Trades market analysis. Alright guys, so this trade I put on Tesla is called an iron condor. Basically what it is you sell a call higher than the trading price typically, and then you buy another one higher than that for protection. You sell a put, and then you buy another call to protect your risk as well. So if the stock trades in that range, you keep all the credit you gain from selling the put and selling the call. So alright guys, I just want to talk about how I find these trades, and in particular the iron condor trade that I'm taking now. I want to talk about how I found it and what I look for in taking swing trades of this nature. So the number one thing we need to be looking for is volatility. And why is that? Because options are based on, their price is based on the expected move. So if there's an expected move in Tesla of $30 in the next week, that's going to be priced into the options contract prices. Okay? So we need options contracts to be priced high, and we think the stock is just going to kind of flatline, and then we can base our trade around that. A few good examples of stocks that you can look for are the usual suspects, volatile stocks, Tesla, BYD, all those, Boeing, the heavily traded large caps that are pretty volatile, and especially earnings plays. This iron condor strategy is great for earnings, especially earnings that are highly anticipated, and we can use the retail traders' tendency to try to pick a direction into earnings against them, and we can just say, okay, the earnings are coming out, it's trading at 50, let's take Tesla for example, it's trading at 1500 right now. We don't think it's going to go over 1550, we don't think it's going to go below 1450, and we can make the trade based on that. So I hope that provides a little insight. I'm not going to go into all of the strategy that I use trading the iron condor in options in this video. I might make a video in the future doing so. I hope that clarifies how I found this trade. What I did, and my thesis behind this trade, is that let's back it off into a 1 year, 1 day chart. Tesla has been on such a run lately over the past few months, up 300-400%, that it needs time to digest this move. And even over the last 2 weeks or so, it's kind of been getting outrageous. So we had this topping tail back here, which is an indicator of that the stock is running out of steam and it may need some time to digest. So what I thought is that we're probably going to need to chop around for the next week or two. So I went ahead and sold an iron condor, and my call strike price that I sold was $15.30 right there, and my put strike price that I sold was $13.95 right there. I bought a $13.85 put to protect my risk, and I bought a $15.40 call to protect my risk as well. So what I need Tesla to do, today is Thursday, so what I need Tesla to do for the next 2 days is stay between these two lines, and I will profit the entire credit of the contracts that I sold. So I sold 7 contracts. Let's try to find the position that I'm in. Here's the position that I'm in, right here. So I sold 7 contracts of each. I sold 7 13.95 puts, bought 7 13.85 puts. I sold 7 15.40 calls, or 15.30 calls, and I bought 7 15.40 calls. I'm currently up, I think, about $900 on the trade, but with these weekly options contracts, if we can go into the options chains, TSLA options chain, Tesla options chain, we can see my position and the contracts that I'm in. And so these weekly options contracts, they expire very quickly. If they're out of the money, the value, the extrinsic value, which is the value that you're in volatility and other factors that aren't incorporated into the actual price. Like a contract in the money, for example, Tesla's trading at 15.14 right now. So this 15.10 contract is in the money. So it's only in the money by what? $4. So the rest of the price is extrinsic value, meaning the contract at I can't talk. The contract at expiration, if it expired right now, this 15.10 contract would only be worth $4 right here. But it's right now it's trading at $33. So if you can sell contracts higher and lower than what the stock is trading at the current moment, you can use the time decay, which is theta. We can check out the Tesla time decay. So let's change this volume to theta. Here we go. All right, so this contract that I sold is losing $7.79 a day. So as long as I can hold on and keep the position without it breaking up to the upside or getting an extreme sell-off down here, this contract is so today it'll lose $7, and tomorrow it's going to lose more than that because it's trading at Tesla's trading at 15.13. My call is at 15.30. So at Friday at expiration, if it's not above 15.30, it's going to be worthless, and I'll keep the entire credit. So that's the plan. Tesla is perking up a little bit. Yesterday I was down on the trade. It closed strong, but I'm just going to ride it out. I may take a couple contracts off if we get another sell-off down here towards the close or tomorrow morning, but I'm planning on holding most of them and see how this works out for me and see if I can ride it out to expiration and keep the credit for myself. So I hope you guys got something out of this video. If you did, do me a huge favor and hit the like button. It really helps me out. And I appreciate the views. If you haven't yet subscribed, make sure you go ahead and do so. And I'll catch you guys in the next video. Peace.
Drop.